What's going on, guys? Matty Ice here. Welcome back to another episode of Investing with Matty Ice, where I share my investing journey with you guys, specifically when it comes to income ETFs. And today, we're going to talk about surviving the current Bitcoin and BTCI bear market that we are in. I think it's pretty obvious at this point, considering that the price of both of these assets continues to decline pretty significantly, right? It's pretty wild times we live in. But I think this is a pivotal moment for a lot of people because the knee-jerk reaction, the emotional response to what is happening right now is to get out. Like, we freak out, we get out, we don't want to lose all of our money. And then what happens is you end up buying high and selling low and locking in massive losses only to see the asset eventually recover. And then you kick yourself for the next 6 months. Like, man, if I had just held through that correction, then I'd be super rich, whatever, right? You get what I'm saying? This is what happens, I think, to most retail investors, because they don't have a game plan for surviving a bear market. They don't know what to do during a bear market. They automatically assume that, oh, this must be a bad investment because the price is collapsing right now. It's got to be going to zero, right? I need to, I need to get out while I still can, right? And look, I'm not saying that there aren't some circumstances where that should be the case. Like, I don't know if you guys were part of this, but you probably remember the Terra Luna collapse and USTC collapsed, and how that went from I don't remember the peak of how, like, the price of Luna, but that pretty much went to zero. USTC went to zero. All right, that would have been an incident where you probably want to get out, right? But that's also I don't want to seem like I'm comparing that to what's happening with Bitcoin. It's actually, in fact, quite the opposite. Okay, what I'm saying is, in some cases, does it make sense to cut our losses? Sure, but in order to do that, in order to determine whether this is one of those times, we need to take a step back. We need to take a breath, make sure we're not making an emotional decision here, reevaluate the decision from the beginning, and to see if anything about this has changed with regards to our investment thesis. Like, looking at, why did I buy Bitcoin in the first place? Why did I buy BTCI in the first place? And if none of that has changed, in fact, it's actually gotten better fundamentally, more adoption. It's just we're experiencing a price decline, and there's no major reason for that. Like, Bitcoin hasn't been hacked, the 21 million supply cap hasn't been changed, things like that. If none of that's happened, then the thesis is still the same. The narrative is still the same. We're just seeing a correction, like a normal correction. Like, if you've been around Bitcoin any amount of time, this is normal. Like, I've been through this like 2 times now, I think, like, just watching Bitcoin swing wildly, the price, that is, right? Just massive volatility. But also remember, guys, that volatility is a gift, especially if you own BTCI. Like, the higher the volatility, the better the income is, right? And specifically with NEOS funds, it's actually going to allow BTCI to recover much faster than other income ETFs, because they slowly start selling covered calls on a smaller portion of the portfolio, so that when Bitcoin does recover, BTCI will recover with it as well. Maybe not as much, because they're still selling away some of the upside with the covered calls, okay? But it should recover pretty quickly anyways, right? But that's kind of my point, is the volatility, when you reframe this, the volatility is a gift, right? Because especially when you own an income ETF, right? That volatility can really serve us, not to mention that the volatility that causes the price decline is the same volatility that causes the price to skyrocket at some point. And while the price is down, it's a gift because we're able to accumulate more of it at a very steep discount, all right? So let's get into it. First thing I want to show you guys is this chart that I put together that I actually got from, I didn't get from Gareth Soloway, but I follow Gareth Soloway at verifiedinvesting.com, which I strongly recommend you guys do as well. He is the GOAT when it comes to technical analysis. I'm not a trader or anything like that, but I do look at charts. I got this, I got this from Gareth, where basically we have a pretty nasty head and shoulders pattern here that looks like it's been confirmed. It's broken down below the neckline. So I think there's more pain to come, guys, just so you're aware. Right? Just start preparing yourself. And that's what we're going to get into. I'm not trying to like freak you out or anything, but again, this could be a massive opportunity if we're positioned correctly. But, and here's the thing, it's not, the price is not guaranteed to go down this much, but typically when you break a head and shoulders pattern, you take the neckline to the head, drop that down, and that's where the price is likely going. So we're looking at potentially a Bitcoin price of between $30,000 and $40,000. That's a long way down. That's because it's like 74,000, I think, right now. That's a pretty steep decline. Of course, this is normal for Bitcoin. We've seen this plenty of times. But why I'm bringing up this chart is this gives me an idea of how I want to deploy my capital into both Bitcoin and BTCI along the way. All right, and also before we get into the details of that, I want to show you guys. I mean, I feel the pain too, but again, what does that even mean, right? We're gonna define that. But like, this is my portfolio right now of BTCI. It's down 13%. That kind of sucks, all right, on the surface. But am I worried about it? Not really, because this is a long-term investment. I don't plan on ever selling it. Like, why would I sell an income-producing asset that's yielding 20 to 25% when I could just collect the distributions as cash flow? Like, we don't usually want to sell income-producing assets. So if I never sell it, then do I ever lock in the loss? No. Plus, those distributions are going to lower my cost basis over time. So this decline is going to get better and better. It's going to improve naturally, even if BTCI doesn't significantly recover for a while. My cost basis, you see my average share price is $42.53 by now, $42.53 per share right now. Now, that's going to go down as I continue to reinvest my distributions, right? So that helps with the pain of the volatility a little bit, those distributions. But also, this doesn't impact my life, guys, whatsoever. And we're going to get to this in a minute, but if your portfolio declining has a major impact on your standard of living, your quality of life, then you might have too much exposure. Like, and not to mention, you probably need to focus on increasing your income. Like, because my businesses right now, I have like the cash flow has nothing to do with what is happening in my portfolio right now. My portfolio is down 13%, has nothing to do with my cash flow, nothing to do with my business. My business just keeps going, right? I got a marketing agency and other YouTube channels and all that. It's my primary business, right? But, that's something to think about as well, guys. Like, if you're constantly checking the portfolio and it's stressing you out and it's actually impacting your life, it might be time to reassess things, right? So let's get into some details here. Reality check. Just a reminder, guys, when you're in an asset like Bitcoin, volatility is part of the game. It's a major part of it, right? So we just have to suffer through it. But you don't really have to suffer through it if you have the right framework, if you have the right mindset around this. Because I don't feel like I'm suffering right now. My portfolio is down. Don't care, right? So I'm playing the long game here, and I consider this a gift from the market right now to buy an asset that I have believed in for a very long time, Bitcoin, and now I can also accumulate an asset that is linked to Bitcoin in some way, shape, or form that monetizes that volatility. Like, I can get that at really cheap prices right now. I'll take it, man. I'll take a 30%, 50% discount all day long. But here's the thing, guys. If you can't handle volatility, maybe you shouldn't be investing. At the very least, don't check your freaking portfolio every day. Don't follow what the market is doing every day. Because if you can't handle it, here's the problem: is at some point the pain is going to get too bad where you're going. I'm not saying you specifically. I'm saying this is just what happens to a lot of people. They end up selling because they can't handle the pain anymore, because they're checking their portfolio every single day. They've forgotten why they made the investment in the first place. All they're paying attention to is my portfolio is down 30%. Oh my God, right? As opposed to treating this like what it's supposed to be, in my opinion, a long-term investment, and taking advantage of the opportunity that we have to buy more at a very big discount. Right. But that's the thing, guys. If you can't handle volatility, maybe you shouldn't be investing in a volatile asset. Maybe some of the other NEOS funds might be better for you. SPYI, QQQI, maybe some of their treasury ETFs as well. They don't yield as much, but that's because there's less volatility. So if you can't handle the volatility, you need an asset that's less volatile. Just makes sense. All right. And like I said earlier, this volatility should not impact the quality of your life, guys. If it does, you probably have too much exposure to it. You're relying on it too much to build your wealth. I've always believed that we are our greatest asset, and that these different financial assets can help us accelerate the wealth building process and reach our financial goals much faster. But at the end of the day, we are our greatest asset. Our ability to produce income is one of our greatest assets, because we can't put any money into these assets in the first place if we don't produce the income to begin with. So I think also if this is really bothering you, well, take a step back and maybe start focusing more on increasing cash flow, and so that you could take it, you're in a stronger financial position. Maybe put a little bit more money in your emergency fund. I have tons of money in my, well, tons of money. I say it like I'm like super wealthy. I'm not. What for me, it's a lot of money in my, like my, in my emergency fund, and you know, where my safe money is, right? This is a small, a pretty large portion of my portfolio, like BTCI and Bitcoin combined. Okay, but the fluctuation in price doesn't impact me whatsoever. It doesn't impact my quality of life at all. All right. And, you know, like I mentioned earlier, volatility isn't a bug. It's what gives us the high yield in BTCI in the first place, and eventually gets those ridiculous, those ridiculous parabolic moves to the upside that Bitcoin is known for. Right. So you have to take it in with both directions here. You know, volatility to downside, but it's the same volatility that makes the price skyrocket over time as well. All right. Most investors lose because of behavior. I would maybe expand upon this, like their mindsets and understanding their investment thesis and philosophy to begin with. And yeah, like if you don't have that framework, that game plan for how to deal with the bear market, whatever that looks like for you, okay, then, you know, people end up panicking and then they sell at a massive loss, right? So like I said, stop checking the portfolio every day if this is stressing you out. You know, go do something fun. Go spend some time with friends and family. Like, we don't need to be locked in on what the market's doing every single day. All right. And also, guys, I think this is really key. Don't treat long-term investments like short-term trades. Let me say that again. Don't treat long-term investments like short-term trades. See, if we were at like swing trading this right now, and we bought Bitcoin at 100,000, or we bought BTCI at 50, yeah, I mean, we probably it'd be an issue, okay? But we're not. I mean, I don't know about you guys. I'm not trading this. I am holding this for the long term. So don't treat long-term investments with short-term trading psychology, mindset, whatever, right? You get what I'm saying, right? This is great too. Emotional decisions destroy good strategies, okay? See, I believe very strongly in my investment thesis. I really believe in Bitcoin. I believe in BTCI. And so I don't get worked up about this. And therefore, I'm not going to make an emotional decision to sell, you know, cut my losses when I know I have a good strategy in place. All right. So here's like a good analogy, I think. Good way of thinking about this. Like, if you own a cash flowing rental property, do you care if the price of the value of that property declines by 10%? If you have no plans to sell it anytime soon and you're just collecting the check every single month, do you care if it's down 10 or 20%? No. I mean, maybe in some circumstances, if you're planning on selling it at some point in the future, maybe you're tapping into some of the equity. I don't know. Okay. But in general, if you have a cash flowing property, we don't really care that much. It's not as significant what the value of that property does, right? Kind of very similar with BTCI, because it's an income producing asset. Yes, the price is fluctuating. It's coming down quite a bit. Okay. But it's still generating cash flow, right? So am I worried about it? No, I'm not. All right. Emotional and financial stomach test. Can you actually hold this asset? Can you hold something like Bitcoin? Can you hold an asset that is linked to the price of Bitcoin? This goes back to testing your conviction when volatility rears its ugly head sometimes. It's not an ugly head, it's a gift, in my opinion. But you've got to be able to stomach the volatility, both financially and emotionally. We've touched a lot on the emotional side of it. Okay. Financially, though, well, I guess we touched on it financially as well. Like, you shouldn't be freaking out about how you're going to put food on the table or how you're going to make the mortgage payment or anything like that because your portfolio declines. And if that's the case, then you've put yourself in a really tough spot. That's not a product of the investment itself. That's what you've done with the investment. Maybe you've over leveraged yourself. Maybe you just have too much exposure to it. All right. But you got to be able to stomach these things. Otherwise, you're going to end up making emotional decisions that have very negative long-term financial consequences. All right. So for me, this is about strategic capital deployment right now. Okay. I know it's hard. It can be tough to not double down, but you see what I'm saying? Like to buy more of something when the price is declining. But how much do you believe in this thing or not? Okay. So, and here's the thing. We don't know where the bottom is. Yes. We looked at that chart and it's broken the neckline of the head and shoulders pattern. We got an idea of where it could possibly go. The probability is likely, but not guaranteed. But that doesn't mean I'm going to wait for it to get down there to that price to start deploying capital, because we don't know. I don't know where the bottom actually is and if it's actually going to go there. And I don't want to miss out on an opportunity to acquire this asset at a discount. If it continues going further, fine, I'll continue deploying capital. We don't deploy all of our capital all at once, guys. That's where you put yourself in a really tough position where you could potentially end up, buying at the top, and you have no more capital to deploy because you thought the thing was going to the moon, but then it enters a bear market, and now you can't take advantage of the fact that it's $35 a share now, right? And which would obviously significantly lower your cost basis as well. Okay, so think about that, guys. Strategic capital deployment. That's where I'm at anyways. All right, this is not specific financial investment advice. I'm just sharing what I'm doing and my thought process around this. This is also about probabilities. Ask yourself this, guys. What's the probability of Bitcoin going to zero? Okay, ask yourself that. And obviously, I keep bringing up Bitcoin because that's the reference asset for BTCI. All right. I think the probability of Bitcoin going to zero is pretty much zero. I mean, anything is possible, sure. Okay, but at this point, I think we're beyond that argument, right? There's just too much mass adoption of Bitcoin. It's too integrated into the financial system now. It wouldn't make any sense for Bitcoin to go to zero versus what's the probability then? All right, we have the base case for it not going to zero. What's the probability of it recovering, like it always has, and reaching new all-time highs? What has a higher probability? Because that's really what investing is all about, right? It's probability. There's no guarantees with anything. It's just probability based off of information, okay? So I personally think that Bitcoin has a much higher probability of recovering and eventually making new all-time highs. That's just me. You might think differently. I don't know. Drop a comment down below. Let me know what you think. But I think that so because I think that scenario has a much higher probability of happening, that's where I'm going to put my money. That's what I'm going to bet on, right? Not it going to zero. So but then also if it's not going to zero, then doesn't that mean eventually it's going to recover? I would think so, right? So and then when Bitcoin recovers, won't BTCI follow? I literally just did a video on that. I'll leave that in the description and pin it to the top comments if you guys want to watch it. Why BTCI is set up to recover with Bitcoin, not dollar for dollar, not percentage, not like the same percentage wise. It's going to lag a little bit, okay. But the way that Neos operates their funds with these covered call strategies, these funds are set up to recover with the underlying and reference assets. All right. So what are we really worried about? Volatility is the price of admission. That's how I like to think about this. So here's the thing, guys. Remember, Bitcoin is the scarcest monetary asset on the planet, and we're still in its infancy. It's a teenager. It's 17 years old, right? So of course it's going to be volatile. And what you have here is 300, 400, whatever it is, 300 to 400 trillion dollars of value experimenting with this asset that's only 1.5 trillion dollars market cap. Right. And where I get that $300 trillion number is, so Bitcoin is the engineered solution to the store of value problem. So you have hundreds of trillions of dollars in bonds, stocks, real estate, art, gold, all trying to find a home to store value, to store economic labor and things like that, right? Over the long run, to beat inflation, et cetera. And while those are good, they're not the engineered solution for it. Bitcoin is primarily, one of the main reasons anyways, is because it has that 21 million cap, right? There will never be more than 21 million Bitcoin. So you have this massive like tidal wave of liquidity, experimenting with this small little asset over here. What do you think is going to happen with the price? Of course, it's going to fluctuate. Okay, but that's just the nature of the game. That's the nature of Bitcoin right now. Okay, over time, that volatility might decrease, but right now it's in its infancy. And here's the thing, guys, you don't get early stage returns with late stage. I think I mistyped that. That was a lot better than it was like before than what it is now. So we'll skip that. But anyways, hopefully you get my point, right? Volatility, it's part of it, guys. It just is what it is. Now, I think this is, I got some really good lessons from The Big Short. If you guys haven't watched this movie, I was watching it again the other night. You have to watch it. All right. And I actually think there's some really good, important lessons from that movie that I want to share with you guys. And there's a part in the movie where Michael Burry, this was, if you guys haven't seen it, it's about the 2008 financial crisis and how there were like a small group of investors and stuff that saw what was happening with this market bubble and mortgage-backed securities, CDOs, and all this crap. And they basically bet against the housing market. Okay. And there's a point in the movie where Michael Burry, he's established this very large position, this very large short against the housing market, and none of his investors are okay with it. They are starting to freak out, and he has a meeting with them, and he says, Michael Burry says, I may have been early, but I'm not wrong, right? And I think that's really profound. Like, so what ended up happening was he was paying $80 to $90 million per year in premiums. His fund was down, I think, over 20% at one point. When you're managing billions of dollars, that's a lot of freaking money. But at the end of it, he ended up over the fund earned over 400% because he was right. And the reason I'm bringing that up, the way I translate that to what's happening now is like, as I'm deploying capital into both Bitcoin and BTCI right now, and the price continues to decline, my portfolio is losing value. Okay. But I'm continuing to deploy capital slowly. And even though I'm early, like because I haven't timed the bottom, like the bottom, like it's still working its way to the bottom, I guess. All right. So I might be early deploying capital. I might be early buying more Bitcoin and more BTCI, but I don't think I'm wrong. I don't think I'm wrong at all. I think eventually it's going to turn around. Bitcoin will make all-time highs. BTCI is going to follow. I don't know if that will make all-time highs. We'll get to that in a minute. Okay, but hopefully that analogy makes sense. Is, I might be early deploying capital into this right now. There might still be some downside, but I'm not wrong. And if I'm not, then the payoff is going to be huge. Okay, so and then at the end, so investors mocked him the entire time, and then at the end, he's going through his voicemails, and there's this one investor who criticized him. Pretty sure he did, anyways, the entire time with this trade. And you know what he says on the voicemail? He says, "What? You're buying stocks? The market's at an all-time low. Are you crazy?" And I'm thinking to myself, well, yeah. We buy when it's at an all-time low, and then we sell when it's at an all-time high. That's how you do investing. Like, why are you freaking out because the market's at an all-time low? It's at a discount. That's when you buy. You buy cheap, sell when it's expensive, right? So anyways, those are some lessons that I took from The Big Short that I wanted to share with you guys. Watch that movie if you haven't. There's some good lessons in it. All right, what people forget in bear markets, remember this about BTCI, guys, is regardless of what's happening with the price, this is an income ETF. So the cash flow continues, right? The yield is likely going to stay pretty consistent. The dollar amount on the distributions might come down, but it still generates the same yield. And when we reinvest those distributions, we're lowering our cost basis. So then BTCI doesn't even have to fully recover like maybe Bitcoin would, because our cost basis has been lowered the entire time. And we're able to accumulate more shares at a lower price, even if you don't have capital to deploy right now. BTCI's yield is like 28%. That's pretty significant. And if you reinvest those distributions, that's going to bring your cost basis down pretty quick. All right. So, and one other thing here too, guys. Now, again, it's not financial or investment advice, but this is just what I'm doing. I don't see BTCI as an asset to be sold. It's a very high cash flowing asset. Why would I ever sell that? So if we don't sell it, then why do we care about short-term price moves? If we're not going to sell it, because we're not making that emotional decision, right? We're not freaking out. We remembered why we did this in the first place. We're in it for the long run. Okay, so if you're not going to sell, then what are we worried about, right? So, and then here's the asymmetric question, guys. Let's zoom out. I'll give you a scenario here. Because I believe that Bitcoin, now I don't know when, but at some point we'll see $500,000 million Bitcoin. Just the basic laws of economics, supply and demand. The fact that it's capped at 21 million and has such a high demand for the asset, I believe that that asset is going to significantly increase in value over time. So if that's the case, then what happens to BTCI? All right, where its reference asset is Bitcoin. If Bitcoin goes to 500,000 or $1 million, what does that do to BTCI? Right. So I guess the key here is that you have to believe in Bitcoin. Like if you believe in Bitcoin long term, then this should be a no brainer, and then like this should be an opportunity. And of course, if you don't believe in Bitcoin long term, why are you buying an asset that's linked to Bitcoin? That just wouldn't make any sense. Okay, but I like this at the bottom. Bear markets where future income streams are built, because again, it goes back to buying this asset when it's at its all-time low, and being able to accumulate so much more of it than we would at say $60 a share. All right, it's going to significantly increase cash flow later on down the road. So here's the bear market rule book, guys. I love this. I think this, like for me, this is a game changer. Think like an owner, not a trader. Oh man, I'm going to say that again. Think like an owner, not a trader. Trading is, I don't know anybody that does it successfully other than Gareth Soloway. I mean, I know there's other traders out there that do it successfully, but man, trading is very difficult. I like owning shit. I'm not trying to trade in and out of these things. Okay. So try and extend your time horizon a little bit. Think longer term. Don't worry about what it's doing over 6 months. Let's worry about what it does over 6 decades or 6 years or something like that. Right. If you buy a house and it's down 10% in 6 months, do you care? Not really. Maybe if you're flipping it, again, like if you're trading stuff. But if we're holding this sucker for 20, 30 years, then, we shouldn't be too worried about it, in my opinion, anyways. Don't make short-term decisions on long-term assets, guys. Final message. I'm going to echo the great Jack Mallers here and just expand on it a little bit. His message is always stay humble and stack sats. Mine's going to be stay humble, stack sats, and BTCI. That's what I'm doing anyways. All right. If you don't follow Jack Mallers, you have to. I mean, most people in Bitcoin know who Jack Mallers is. He's freaking awesome. All right. Don't let emotions override math or your investment strategy, whatever that is for you. All right. This is how you survive and thrive during a Bitcoin and BTCI bear market, guys. We're not trying to just survive this. We're trying to set ourselves up for massive success later on in the future. So anyways, I'll go ahead and wrap up with that, guys. I hope that was helpful. Hope that provides a little bit of a framework for you, a breath of relief maybe. All right, just be strategic, guys. All right. Hope you're crushing it, and I will talk to you in the next one. To your success. Matty Ice is out.